In this recording, I want to talk to you a little bit about where to place your stop loss. In the beginning part of my trading career, that was one of the hardest things I had to learn, is where to place a stop loss, and I was losing a lot of money. One of the 4 steps that helped me was where to place a stop loss. I was placing the stop loss way too close to where I would get in. Many people will place them where if it's a news announcement, the spread widens, they're taken out as soon as the news announcement starts. So they're taken out before they even get started. So I didn't want to place my stop loss based on a certain percentage or a certain number of pips. I didn't want to place it on a pivot point. I didn't want to place it on a Fibonacci line. Those are where many other people are placing their stops, and so that kind of drags the market to that area. So I wanted the market to tell me. So let's just do a couple of entries here. I placed a couple of lines up here to help us move quickly. On this particular trade, right here would be a good entry signal based on your confirmation of your 2 indicators. And the place that I would place our stop loss is 1 pip below the bottom point right here. So now we have if we had a stop loss is set at about 20 pips or so, and we're looking to make maybe 25 pips on that one, so that's not too bad. If that's too much of a stop loss for you, then don't take the trade, or trade with a smaller number of lots. Now if we're coming back down the other direction, let's say the entry signal would be right here on this bar, so this candle. So let me bring this up to right in this area where the entry signal would be, and our stop loss would then be 1 pip plus the spread, which in this case would be 2, so we're 3 pips above the top of that candle would be the stop loss. So now we have a 13 pip stop loss, and it went down and came back up close to where we got in, but it still left us plenty of room to move, and so we were able to make about 28 pips on that trade. So that's one illustration. Let's move on to some other illustrations. Let's take another point, an entry signal. So someplace right in this area is where the entry signal says it should be. So we move our entry signal at this point, and our stop loss would be 1 pip below this point right here. And so how many do we have at risk now? We're risking 17 pips. If we were to get out in this area, that's 29 pips profit, but we can show you how to trade through all this and take a 50-60 pip profit on that one. Let's take this one. This one's not really a great breakout move, but it is. There are some signals. So the signal would be right in this area right here to put a sell on. So let's move this up to right here for a sell point, and let's move our stop up to 1 pip above plus the spread. So let's see what our distance is now. We have 13 pips on that one, and so if we're entering right there and just waited until it gave us some good exit signals, we could have gotten 25 pips out of that. If you'd really wanted to do it, you could have moved to a larger time frame and probably smoothed that part out. But that's where you place the stop losses. This is a bid chart, and so when you put a sell on, like in this instance, then you have to place your stop 1 pip plus the spread, so that you're showing where the ask would have been. And if you're doing a buy, like we did over here, then you would place 1 pip below, because that is the bid price that you would see there. So I hope this helps you out. Practice going back and seeing where you would put your stops on different trades when you see the market move, and hopefully this gives you some ideas to give the market room to breathe. Sometimes it comes back up and takes me out, but that's okay, because that's where the market was saying that it was not going to go in that direction anyway. So happy trading, and trade well. Talk to you another time.